Are you struggling to trade as an active futures trader with a small trading account? Then this video is for you. By the end of this video, we're going to be talking about how you can leverage the power of futures, micro E-mini contracts to take advantage of trading a small trading account for big opportunity. Sean Kozak here, tuning in again with NeuroStreet. And for the world's best trading education and strategies, make sure you hit that subscribe button. That's going to help the channel grow. And more importantly, turn that notification bell on so that every time we put out content like this, you get results. Give us a double thumbs up. That way you know you're engaging in the content so we can help you moving forward. Now, the purpose for this video is to empower you so that there's no barrier to entry in you getting started as a professional trader. Now, why is this important? Because we have a ton of traders that trade with us live in our trading rooms that have small trading accounts, and they take advantage of huge opportunity, not at the risk of not having enough money to trade. Now, why is this important to you? Well, depending on where you are with capitalization, the number one barrier to entry in this business is lack of trading capital. Rest assured, NeuroStreet's got you covered. What we're going to do in this video is we're going to break down why micro E-minis is the new wave in futures day trading and how you can take advantage of it moving forward. Now, let's jump on the whiteboard here and let's talk about this. Leveling the playing field. Recently, the exchanges authorized a new asset class called micro E-mini futures contracts. And what this does, it leveled the playing field for the small guys. Rest assured, Wall Street's always going to make their money in the banks, but new traders like yourself who are looking to take advantage of trading small accounts are definitely going to want to participate moving forward. Then we're going to talk about why micros are such a powerful asset, especially on the rise of volume, because we've seen a recent shift on more retail traders trading micros than the regular contracts. And then we're going to talk about margins and commissions, because unlike regular size E-mini contracts, margins are less and commissions are less if you're trading micros. So once again, another advantage for the retail trader. We're going to go into the volume thresholds and what we normally look for in our classroom to make sure that we don't trade a micro that doesn't have liquidity. And then we're going to give you the rules so that you always know how to trade the best markets of your watch list. And last but not least, we're going to give you a comparison so you always know the difference between regular contracts and micros and why this can be the next big wave for you as a retail trader. Now, let's get into this because it's one of my favorite videos to teach and it's one of the most powerful assets that you can have as a new trader. See you in the charts, trader. Welcome back, traders. In this video, we're going to be breaking down Futures Explained Part 5, where we look at micro E-mini contracts. Now, this is going to be the final video for the Intro to Futures section. So basically going through the Futures 101 program. This is going to conclude the mini series in getting started in the futures markets. Following this video, you're going to want to go moving into the education courses for all platforms and then the add-ons and the strategies, okay? So let's talk about this exciting topic, which is revolving around micro futures. Now, the reason this is such a good topic is because it was a huge thing that took place, a huge change that took place in the financial markets for futures trading. When this happened, basically what this was, you know, the exchanges and the regulatory environment for futures had a huge change, and what it meant was they created micro contracts on the stock index futures. So up until a while back, when this just became, you know, realized in the industry, basically you were only able to trade full-size contracts on the stock indices. And now they have the micro E-minis, which basically leveled the playing field essentially for all the retail day traders, because not everybody's trading with a lot of money. And this is a really good opportunity for a lot of traders to come in and trade with small accounts and ultimately come in and actually, you know, still take part in a very lucrative environment. And what's really neat about this is that, you know, they're pretty much neck and neck, tick for tick, you know, the main contracts versus the minis versus the E-minis and the micros. So we're going to look at this here in detail. So I want to talk about a few things in terms of the benefits. So why would we want to trade the micro E-minis? Well, it's the same benefits as the regular E-mini contracts, right? You have less upfront capital needed to trade them. So if you're trading with a small amount of money, right, you can still participate in liquidity, but with less required capital. You got the same volatility as the normal E-mini contracts. and it caters to lots of traders with less money, right? Not everybody has a big account. Now, the same benefits as all of the other markets, but you're trading with 1/10 the size. And another huge advantage is there's less day trading margins with lower risk to your account. So you get to you can participate in like multi-level scaling. So like let's say you were only able to trade 1 or 2 contracts with a regular S&P contract. You can actually come in and actually scale in with like 10 and 20 contracts, and you can participate in different types of entry and exit strategies with less risk. You're able to trade with larger stops, right? So you could actually have, maybe if you wanted to trade swing trading strategies or intraday swing strategies, you could trade with larger stops, and you can also trade higher time frames with less risk, right? You could actually go in and actually trade the bigger time frame charts with less capital risk, which is really nice for traders that want to trade like profile strategies like we do, and higher time frame trading charts in a day trading environment, right? So let me kind of show you some advantages here. This is a breakdown of the contract comparisons, and you'll notice that the S&P contracts are very lucrative. The NASDAQ contracts, the difference is you're still moving in 0.25 increments for the E-mini S&P and the NASDAQ. The only difference is that it's $1.25 per contract and 50 cents per contract, right? So instead of the S&P, the normal contract moving $12.50 per tick, this is moving $1.25 per tick. Same movement, same breakdown. The only difference is it's $5 per point. It's $2 per point, $5 per point, 50 cents for the E-mini Dow. And the difference here is that these are the tick increments. So you notice that this is still moving 0.25 increments. The Russell and the Dow Jones, they have independent variables for theirs, and these are the dollar value per tick movements. So it's very, very lucrative in terms of risk metrics for contract specs. The big thing here is the day trading margins. Here's an example of Ninja's day trading margins for E-minis, and then the micros. Look, if you wanted to trade the S&P, it's $500 per day trading per contract. You literally could trade a contract on the micro, and it's $50. So this really caters to traders with small accounts. And if you wanted to grow a small account, you could definitely do so on a micro and then move your way into the E-minis, which is a really, really good incentive to consider this lesson as an alternative. Right now, I normally will run, our educators will run the regular contracts, but we have a lot of traders that just trade the micros as an alternative. And we'll show you an example of the 2 charts. Now, a couple things that I think is really important for this lesson is when they first came out, when the micros first were introduced into the market, one of the biggest questions that everybody would have was, would the market adapt to it? Would the market actually, would you see a transferability of volume? Meaning, would you actually see the participation by global traders? And at first, what we would normally do is, if we were going to actually start trading a micro contract, we would normally want to see about 10% of the volume of the regular E-mini contract, right? And so one of the things that I would normally do is I would just calculate a volume ratio, and I would look at the regular S&P contract, and I would compare the MES. The MES is the S&P, the MNQ is the micro, the MYN is the Dow, and the M2K is the Russell. And all we're doing is we're just dividing the volume ratio from the micro into the regular contract and multiplying by 100 to see exactly what it is. You'll notice in this environment, the Russell was the only market here that had less than 10%. So at that time, I would not establish trade on the Russell. I would only look to trade the other 3 markets. Now, this never happens anymore because the market's accepted the micros in a very large way. In fact, it made it very competitive for retail day traders to participate, and it actually started increasing a lot of day trading activity by retail traders in futures. So, because up until now, a lot of traders would just gravitate to Forex because you could trade a very, very small account with Forex and still participate with huge leverage. And with futures, you couldn't do that. You couldn't do that in the overnight and stuff. So this is really, really enticing for retail traders. Now, I want to show you why this is important, because if you take a look at this, this is an example of the ES. You can see the charts are the same. You know, the one on the left is the 3-minute chart of the S&P E-mini contract. The one on the right is the MES micro E-minis. You can see the price action is literally the same. The timestamps are the same. The only difference is you might see maybe 1 or 2 tick differences on the increments, but you can see the price structure is literally the same. And that's exactly why this lesson is powerful. So if I go in here and I show you, you'll notice if we look at this watch list, I've got the main E-minis up here. You'll see it says indices. So right here, this is the E-minis, okay? And then basically you have the micros, okay? So what we do here is if I were to trade a micro contract, I would want to take the volume of the main contract and I would want to make sure that you have at least 10%. Well, look at this. Look at the NASDAQ. The NASDAQ trades 1 million contracts here on the regular micros, but look at the NASDAQ here on this market. We're trading 2 times the volume on the micros than we are on the regular E-minis. And there's a reason for that, because the NASDAQ is very, very volatile, and it's very dangerous for traders to trade the regular size contract. Even though it's only $5 per tick, it's very volatile. So all of the retail day traders will normally trade the NASDAQ micro contracts because the movement is there. It's a very, very, you get a lot of trends, big trending day, you get a lot of movement. So that creates a lot of range, which creates a lot of price opportunity. Same thing with the S&P. Look at the S&P traded almost 1 million contracts on the micro, and we just traded 1.3 million on the regular. Like, these two markets are prime for day trading. Take a look at the YM. The YM here is 130,000, 170,000. That's almost 2/3 of the volume. So there's no risk of volume on the micros anymore. And if you take a look, this is the S&P. Like, look at the price action. It's the exact same. Look at the high on the wick, the high on the wick, the double bottom low, double bottom low. It's the exact same movement, same timestamps. It's just understanding, one market. Every time the ES moves a tick up and down, it's $12, $12.50, and every time this one moves up, it's $1.25. So you could trade, with less risk or more size depending on your risk profile. So when we run our workspaces and when we run our charts, I want you to understand that you can set your workspaces up however you choose, and you can trade micros. One of the things that I always encourage new traders to start doing is when you build your workspaces and you build your chart layouts in the classes, when you move into the education courses, into the add-on courses, into the strategies courses, and then join us in the live rooms, one of the things you're going to do with futures trading is you'll have the opportunity to practice in a simulated account. A lot of traders will start on the micros, then move to the E-minis. Now, there are micros for crude oil and gold and stuff, but there's very little volume. So it's kind of, it's only really been adopted and accepted by the market as the indices. So it's really more just the stock indices that offer that opportunity, right? So if you have any questions on the micro E-minis, let us know. This is kind of the conclusion to the intro to futures section. And as you progress in our course, the next step is to ultimately move into the education courses and the add-on sections where you start learning about our strategies and our indicators and then all of the processes. And then you definitely want to make sure you register for the live trading rooms, right? And if you haven't yet already subscribed or purchased the access to those courses, now would be a great time to get in touch with our team and get on board the actual education, the live classes, because this is a great primer to getting started in futures. But by all means, we don't really go into the strategies in here. We don't really talk about the trading systems per se, because there's still a lot of things you're going to need to learn about the patterns and the indicators and the trading systems. So that's taught in the other lessons. So I hope you enjoyed the intro videos, guys. If you have any questions, shoot us an email or give us a call, and my team and I are here to help you every step of the way. Take care and happy trading. Wow, traders, welcome back. What an awesome video. This is one of my favorite topics to teach, and I know you got a lot out of it. Rest assured, there's so much more to learn with futures, and if you haven't done so already, there's a whole bunch of links below this video that's going to break down the Intro to Futures series so that you can trade as a professional. Don't forget to hit that subscribe button. That's going to help our channel grow, and make sure you share this video with a friend so that we can help them just as much as we've helped you. Don't forget to ask a question, leave a comment so we can help you become the best trader possible, and we'll see you in the next video.